Hi student, good day. Today we're starting with the chapter 12 of SBL, Strategic Business Leader. Wish you all the best. Let's continue with the reporting to the stakeholder. So how it work and how the stakeholder reporting. This is as we discussed earlier. Stakeholder are the those who just have an interest in the company. So reporting to the stakeholder, like all the stakeholder, like banks, financial institutions, receivable, suppliers, employee, and all these stakeholders are there. Reporting stakeholder, including stakeholder power and their interest. Every stakeholder have a different interest. Employees have a different, suppliers have a different interest, banks have a different, and assess the role of value of integrated reporting and evaluate its issues concerning the accounting and sustainability, advise the guiding principle, typical content element, and the six capital of integrated report, and discuss the usefulness of this information. We will discuss to the shareholder, describe and assess the social environmental impact, their footprints, and the environmental reporting. So those points we will discuss. And EMS and ISO 14000 we will discuss, examine how the audit of integrated report can provide advocate assurance to the relevance and the reliability of organization reports to the stakeholder. So all these important issues for the social responsibility, their contribution for the growth of the company and their performance, whatever company is doing. So they have to all this information is represented through the disclosures. So we'll discuss now the shareholder. There are the institutional investors are there, shareholder activism, general meetings, and proxy voting. And disclosure is also there by the shareholder to the stakeholder, voluntary disclosure and the mandatory disclosure. So mandatory disclosures are those which are their must duty to disclose and to inform the viewer of the statement. Voluntary mean they just have a option to just to say about their nominal things, are their contribution towards welfare and the economy, and these are voluntary, but they have to disclose all these information to the shareholder for the sake of their requirement, and then according to their binding by the law to disclose all the information. Cadbury Report 1992, they recognize the importance of the role of the institutional shareholder and noted that there is a need for the greater director dialogue engaging the group. So these points are there which are required to be highlighted. So 2010 review of UK Corporate Governance Code of Financial Reporting, and then 2016 they have comments that there should be a dialogue with the shareholder used as a mutual understanding of the objective. Institutional investors. So who are the institutional investors? So those investors who are belong to they have a risk in the company, like a pension funds, life insurance companies, unit trust, investment trust, and their bodies who have their interest in the company. Importance of institutionals, the key increase in dominance of this investor class, and they have a complete fund manager and the other professional working in the institution have the skill and expertise to contribute towards the direction of the management. The potential problem, the separation between ownership and control. There are the number of intermediaries creating a complex web of agency relationship like investor, pension funds, and a trustee. So they might have some problem issue which they might notice, which is not fulfilling by the company, and then problem EMS arising from institutional shareholder dominance, like a short-term termism of fund manager, the lack of skill of the trustee, and the lack of influence of individual. If any they lack the skills, so they may be, so there is a problem, there is a risk of a wrong use of their resources, wrong use of investments, so which can cause a problem for them. The fund manager's wrong decision can lead to short-term termism of fund manager who, according to Keynes, are concerned not with the what an investment is really worth of a man that buys it keeps but won't market will value the other, because every person have his own perception, and they can have uh, their own working and their own point of view for this purpose. Pension funds and trusts, they have often a layer of the company secretary, and they have run their own qualification on the financial investments matter. Shareholder activism. So, what is the court of UK discuss about shareholder equity activism? Making positive use of voting rights, engagement, and dialogues, and then paying attention, and then presenting resolution of voting of AGM and requesting an EGM. So these are important thing. Institutional shareholder intervention. Now again, they have discussed in detail. So just go through what is their strategy. Might be in terms of product sold, market, service expansion. This all are their strategies. Please go through. So now this is the general meetings. So annual general meeting like AGM. And then extraordinary EGM is also called EGM for the sake of their extraordinary general meeting if it is required. So AGM must held once every calendar year, legally required. This is all the key points, students. You have to go through. These are the points which are the easy to remember. So they in scenario they can test you. Annual and extraordinary general meetings. So now again they have explained it further. Disclosure or general principle. What are the directors' understanding and interest on the concerns of the shareholders? Disclosure best practices for corporate governance. UK code main points of the disclosure covered. The remuneration committee, the nomination committee, directors, annual journal, audit committee, mandatory versus voluntary. So as we earlier we discussed, mandatory information in which must be publicly disclosed to comply with set of laws. And voluntary, the information which a company may disclose should it choose to do or not. These are the annual reports becomes the tool for the voluntary disclosure. The chairperson, CEO statement regarding company position, business view, and then accounts, governance, AOB, any other business, stock exchange listing rules. Expansion of disclosure beyond annual report, press release, management forecast, annual analyst presentation, AGM information on corporate website. These are the voluntary disclosure. Please go through. This will help you for your understanding. One time reading, two time reading is enough. If you remember some key points, motivation behind voluntary disclosures, the fuller picture, the more information help investors. Now, the sustainability meets the need of present without compromising the need for the future generations. So long-term maintenance is also there. Sustainable development, this is also can be tested, and they ask for definition or any point. It's best to have a read on these areas. Significance of sustainability. Sustainability audit is also there, scored beyond requirement of traditional environment. Use of sustainability information for the board, shareholder, trading partner, regulator, other stakeholder. Benefits of producing sustainable information. User read business sustainability information associated with assurance report when making a major decision about the business. So the sustainability report presents about the company's determination whether the scope of reports produced match what users want. So it is just to fulfill their gap, their requirement, and the effects of economic activity, social footprint, environmental footprint. So these are the footprints which are required for their work. So what they are doing now, is it a environmental footprint define whether it is whatever companies are doing now, it is environmental friendly. So whether it is making creating any trouble or problem for the future resource consumption, whatever is any harm they are making it to the prot about the pollution emission. So measurement of resources. So whether any thing which they are doing it now, in future can it create a problem? So this is the meaning of footprint. So if you pass by some area, so you left your footprints. So this is the meaning of footprint in the business term. So environmental footprints, whether your these industries are footprint, they are environment friendly. See, this is environment footprint. So 50 million gallon of water. So the organization share available fresh water is less than this. So use of environmental resources divided by production of environmental resources is equal to result unsustainable. And then water use 15 million gallons, water production 10 million gallons is equal to unsustainable. So this is the way how they are just representing their definition. So this activity, production of detergent, so how environment footprint, they use a chemical within the product, improve chemical formula to decrease the amount of chemical used, or the manufacturing the product in fewer location to obtain a manufacturing economies and reduce emissions. So this is the reason. This is the matter they have explained. Transportation form, manufacturing plant, packaging for the product. So what the footprint they are giving to the economy. Social footprint, sustainability in areas of capital, human capital, social capital, and constructed capital. How for the social their activities are helpful. For anthro capital, the social network and multi-held knowledge for collective to take effective action, personal health, and then constructed. Triple bottom accounting, PBL. The concept is also explained using the triple hedging of people, plant, and profit. These are the people, plant, and profit they discussed. Just reading. The management system, internal management system, EMAS and ISO 14,000. This is focus on disclosure of environment. So the environmental uh, issue now they discuss. Eco management and audit scheme, EMES. This term was also tested, so they may ask, be familiar with the EMES. The key four element of the scheme: legal requirement, dialogue, improved environment, and performance. Employee involvement is there. ISO, what is ISO 14,000 series? Just see standard dealing with the environmental management and the supporting audit program. ISO formulate the specification for EMS. So remember, ISO 14,000 is for what purpose and what is their meaning and how it work. What must organization do to comply with EMS? This is their compliance criteria they have mentioned. Each country can get this license, the ISO 14,000. Benefit compliance with other standards, social and environment audit, social auditing, environmental accounting, how it works. The statement of purpose, external view, internal view, and reviewing of and planning. Now again, the social audit and internal view review of planning they have discussed, explained further. This is the reading part. So now students, whoever is interested for revision classes, please register their interest. So we will be starting revision in first week of February. One month before any exam, like a June exam, we will start in May and September in August and December in November. Exactly, we allocate 1 month for all these revision areas. We in revision we revise a chapter review, we touch base the pass card, and then we case study we will do. Environmental audit, all these are reading part. Environmental accounting. So this is a, don't ignore this area. It might be tested because according to the examiner, so this is their responsibility to test the whole area, whole syllabus in their 3 years time. So be careful. Every time they keep testing. Example, measuring the impact of environment, environmental footprint, social footprint, environmental accounting. This is a social reporting. Usefulness of information to stakeholder. Reason of additional information is useful. Under environmental accounting, this is also. And now this next topic is the integrated reporting. What is integrated? Integrated reporting demonstrates the linkage between organization strategy, governance, and financial performance, and the social environment and economic context within which it operates. So it is a link between social environment, they all their performance and the activities, whatever is the governance strategy is involved. It is linked with the social environmental and context with the its operations. So how it is a benefit for the all these human being and for the company, for the growth, for the all environmental issues. This is a traditional definition of capital, financial capital, alternative definition of capital, manufactured capital. Human capital, social capital, concept of integrated reporting, IR. So how it's seen International Integrated Reporting Council. It is tested purpose and objective of integrated reporting. So go through. These are the purpose and objective to improve the quality of information available provided for financial, provide a more cohesive and efficient approach to enhance accountability to support integrated thinking. These keywords you remember, it's all you are done with this. Value creation for the organization and for others, capitals and the value creation process. So value creation process is represented below and is explained briefly in the following paragraphs. This is all this model students go through. This is important how to prepare integrated reports. Students just go through and have these memorize, remember these points. This materiality is important. Stakeholder relationship is also important. Reporting to stakeholder about consciousness, reliability and completeness, consistency and comparability. Audit of integrated reports. So how it happen, how they make it audit. Key issue of the context. What are the component of key issues? The recent survey of South Africa, where IR was made compulsory in 10 by ACC, has indicated the following concerns of 10 practitioners interviewed. Okay, students, now this is the conclusion of the chapter. How shareholder owns the entity and inform the information from the directors, institutional investors. So there are shareholder activisms, disclosure is there, annual reports and journal meetings. Voluntary, we already discussed. Mandatory, required by law or other like Sarbanes-Oxley. Best practices are there. Voluntary, already we discussed. Company plan, their future plan, their cash flow statement, and their expansion, their new product inventions or new developments, are their website updates, journal meetings, proxy voting. Thank you, student. See you in the next class. All the best for your studies.